Welcome to Common Sense Investing. My name is Cameron, and we're here on another Monday evening live stream. It's September 8th. We're starting to get into fall, but today we're talking about microcap stocks because that's what I love to do. That's what I invest in. That's what I'm good at. That's what my experience is in. And hopefully you're here with me to talk about microcap stocks as well, even though maybe we don't want to. Market's a little bit slower the last week or two, right? Do I really want to sit here and talk about microcap stocks? Unfortunately, I do, right? That's what I put up with sometimes, just being a microcap investor, is basically it's not consistent. Sometimes I have these live streams and Monday is just the absolute worst day in the world to be a microcap investor. There's just a sea of red and nobody's making money, and we come to these live streams and everybody's grumpy and confused. And other times, you know, a Monday or a specific week, we're on this massive bull market and everybody's making money and everybody's happy and not questioning anything, right? So the wonderful world of microcap stocks isn't just volatility within the stocks themselves. It's a little bit of volatility within its investors, and I absolutely love it. So welcome. It is good to see you here. As usual, I have a presentation for you. I've got a few slides to go through, basically talking about what I'm doing in the markets right now, as well as talking about a few stocks. I always talk about a few stocks. Part of what I do on this channel is introducing what I think are some pretty good companies. That doesn't mean that they're good stocks, but some decent small Canadian companies and American companies trying to make it, right? Trying to find success in the world and see their share price go up, and try to connect those companies with some pretty good investors, which is you hopefully watching these videos. So that's what I do. So a little bit of a conversation today about what I'm doing in the markets, and then we'll talk about some other companies. If you have any questions, if you have any comments, if you have any stocks you want me to look at, let me know in the comments. Once I'm done my presentation, I have a Q&A period, and we'll talk about anything you want to talk about. I usually stick around for an hour. These things normally go for an hour if you want to stick around that long. Before I get into anything, of course, this is not financial advice. I'm not your financial advisor. And I always say this, is that I mean this. I don't know anything about you. I don't know your experience level. I don't know the capital that you're working with. I don't know your risk tolerance. I don't know anything, right? So this is not financial advice. This is just communication, because just because it's not financial advice doesn't mean we shouldn't be talking about these things and learning from each other and talking about these different companies. It's absolutely ridiculous to think we should not be talking about stocks on the stock market, but none of this is a solicitation to buy, sell, or hold a company. It's simply how I invest and not how to invest, right? Are we here? This is where I feel like we are at in the market today. And this is a strange thing to discuss, because normally I might come on here and say, well, I think we're in a bit of a bull market or we're in a bit of a bear market. I'm not coming on here today and saying either one. I'm not saying we're in a bull market or a bear market. One thing that I have noticed lately is that we seem to have a lot of investors willing to buy a stock high, or willing to be very excited to buy a stock that's kind of already at its tippy top, and then kind of panic selling, you know, some stocks that are down. We should be doing the opposite. We are not. What does this mean? Does this mean that, you know, the bull market is at the top? Does this mean that the bull market is already crashing down? I don't know. No, this is up to you to decide. I am just going to talk about it today. You're ready. You've bought high and sold low more than just a couple times. Absolutely love it. Haven't we all, right? The trick is to just be right 51% of the time. You will make money in stocks. If you can be right more than 51% of the time, that is just gravy. But too many investors these days, I notice, seem to be doing this. Recent Substack article, I talk about this. And look, this is not me saying that this company or any of the companies that I'm going to talk about today are bad companies, right? I'm just using them as examples. But in the Substack, using them as an example, right, I pulled up Green Lane Renewables. And this was Stocks and Stones, Matthew Martin, talking about Green Lane Renewables. Their share price went up 230%. The impressive performance was helped by the recognition of a $3.3 million in high margin royalty revenues, which seemingly won't recur every quarter. Still, even though, this is a one-time really good quarter, people just seem so excited. They're so desperate to kind of find that next stock that's going to go up significantly, that next best stock, right? That even though some of the quarters are potentially some of the high quarters, the high marks for some of these companies, and maybe it's going to be hard for them. Like I said here, I'm skeptical that these surprisingly strong earnings are repeatable. Despite my skepticism, people are willing to buy share price up 230%. Now, again, I don't specifically know Greenlane Renewables today, right? I'm just using them as an example because this is a company I previously made a video on. This is way back in, I think, late 2022 or early 2023. They were already trending their way down here. This is me making a video in black and white. I was at least a couple years younger here. I think a little bit chubbier too, right? But they were at 47 cents Canadian share price back then. And I was even talking about them then. They really needed a turnaround, right? They needed to show growth. They needed some change. But if they didn't get that, we saw that just share price dropping. Well, I mean, recently share price went down to 5 cents. So I previously covered Greenlane Renewables at 47 cents. They dropped all the way up to 5 cents. Now with all this success, they are back up to 24.5 cents. So I am a little bit skeptical considering this company did not perform very well from my video here in early 2023. That they would be performing well today. Another example I was talking about here was Emerge Commerce. They were up 100%. Share price went from 5 cents to 10 cents on a surprisingly strong quarter where the company stated they had strong cash flow generation with cash flow from operations of $2 million. People bought share price up. It doubled. One of the things, though, is that a lot of this cash flow generation was created by selling inventory they have not even paid for yet. They made an acquisition, they sold the inventory, and they put the inventory on a payment plan, right? So people are very, very, very excited to find that next best stock, right? To find that next best company. And we get these share prices just rocketing up. But when you make sure you know what you own. Make sure that it's just not one spiky quarter and you know what you're getting yourself into, because this is what we're seeing lately. Very interesting to me, right? Like in 2024, when we had that bull market, you would see stocks go up like this, pretty steady, pretty consistently, or you would see stocks kind of go up like this, right? Maybe benching, consolidating for a while, going up, pulling back, but still pretty consistently. It seems like on 2025 right now, we get this. We get a company that releases good news. People don't do research. People don't figure out what this company is or anything. It's just a panic buy, FOMO buy, right? Until basically share price doubles or goes up 230%. So it's just been interesting to me. And because I'm going to show you 3 stocks that are kind of crawling their way back up from the bottom, I also wanted to show you a third stock where people kind of panic bought. This was Cineverse. Cineverse is up from $1.25. It got up here to about $3.56. This is a company that makes television shows and movies. People got so excited that they were releasing this movie, The Toxic Avenger, and how The Toxic Avenger was going to make them an absolute fortune in the box office. This company was going to be flush with cash because they're just about out. And people got so excited by that. They didn't think, they didn't wait, there wasn't any patience. People get so excited. It more than doubled in share price here, right? It went from about $2.50 right here for Cineverse. It went all the way up to $7.39. Now it's at $3.56 and dropping. Instead of people patiently waiting to see how this Toxic Avenger movie was going to go, they bought the share price all the way up to $7.39. In the past 2 weekends, the Toxic Avenger has grossed $3 million. $5 million is their break even. You know, it's not looking very pretty. So patience, no patience these days, right? I'm seeing more of this. I really am. It's all over the market in 2025. Maybe it's just me, right? But we're seeing these companies just skyrocket to the moon when without any proper research, time, patience, or due diligence. And yet people are kind of selling these low companies, selling out of fear. So let's see here. The worst is when you sell and 2 days after it go up for 10% or more. Yeah, it's timing the market perfectly is never going to happen, but we have to try sometimes, especially in microcap stocks, right? So here we have people willing to buy high on, single successful quarters or a single potential successful movie, and share prices up 100%, 200%, 300%, right? Yet a lot of these decent companies that were past winners are going down, 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 down. People are not FOMO buying. People are fear selling, panic selling, right? So it's interesting to me that people are buying high and selling low. Looking at a few of these, right? Recently, this is TrueBar. TrueBar was sitting at around, 65 cents here, rocketed up to about $1.15. Absolutely fantastic. I didn't like TrueBar back here. I don't really like their product. But you look at the recent crash, right? They had one bad quarter. One quarter where marketing expenses were unreasonably high, one quarter where there seems to be a crack in the business plan. So while these other companies are showing one good quarter, they're rocketing up in share price. People aren't expecting 2 good quarters or 3 good quarters. One good quarter, share price rockets up. In this case, TrueBar right here, earnings, had one bad quarter, share price rocketed down to 63 cents Canadian. But if you look at some of the opportunity in this sometimes. Somebody bought TrueBar here at 63 cents Canadian. It is now back up to 77 cents Canadian. So there's a little bit of profit to be made there. Here's another one, right? Simply Solventless had a good year until it started trickling down, and then it had a really bad year. Accounting change, right? Bad quarter, yes. One bad quarter, yes. Accounting change, yes. Fundamentally change the business, no. I mean, you can question whether or not you ethically liked or morally liked what they were doing with their accounting practices, but fundamentally the business was the same here as it was here. It was just the accounting was different. It crashed the share price down to 15 cents. Again, people buying high on these companies that have one good quarter, selling low on these companies that have one bad quarter, and now Simply Solventless is back up to 32.5 cents. It's up 100% since this crash, right? Another one, ADF Group. This was $21. 18 months ago or whatever it was, right? It's been down, 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 challenge after challenge, Trump trade, tariffs, all these issues, right? Down to $5 for ADF Group right here in April. That was only a few months ago. $5 Canadian for ADF Group. On this crash, again, it was trickling down for a while, in all fairness. So yeah, they had a bad quarter that kind of caused this, but it'd been going down for a while. Somebody, a person, not a bot, not a fund, not an institution. No institution was buying here at $5. A person bought at $5. It's now at $9.81 and seems to be benching up, consolidating, benching up, consolidating, benching up, consolidating, benching up. Where does ADF Group go from here? Congratulations to the people who had the cojones to buy ADF Group at $5. I mean, just amazing, right? Buying the fear, buying the drop. When other people are sitting here buying these stocks up on one single good quarter, there is a small group of investors that are buying shares of people that are panic selling. And I tell you what, the people that have been buying these lows instead of selling these lows have been some of the best investors of 2025. Right? I've just shown you two companies that are up 100% from their bottom. So just because a company goes up significantly does not mean that it's going to keep going up. There is risk in that share price. And just because a share price drops in a company, make sure you do your research in both cases, because that does not necessarily mean that a company is all of a sudden bad, right? The answer is it's not so black and white. There's a little bit of gray. So where are we at right now? 2025. right? What am I looking at? Bear market, bull market. Okay, people are buying high and selling low. That's not a good thing. Slow time of year. No reason to panic. I'm not panicking. I wasn't panicking on Q2 earnings. That Q2 earnings was supposed to be an information earnings session. Q2 earnings, which were bad for most companies, I would argue 90% of companies did not meet my expectations in Q2. That's great. That gave me great information on what I should expect in Q3, Q4, gave me a little bit of color around what to expect in the remainder of 2025. And then maybe get excited for 2026, because where I'm at right now is not super bullish on 2025. Hate to say it, but I'm definitely moving a bit more to my strategic thinking here looking into 2026. I've been showing this slide now for a while. We're in the lazy summer. So I'm not saying it can't change, that the market can't show strength again, right? We're right here in September. It's typically a weak month. So what I am waiting for is a little bit more of a bull run here coming up in Q3 earnings season, because we get Q3. There are many companies that are saying that they're going to get improved back half of 2025 earnings now that the American economy is arguably starting to normalize a little bit. So maybe we get some improved Q3 earnings. Maybe that's Q4 earnings. We also get some investor meetings. We get small cap discoveries in Vancouver, September 29th, and we get Planet Microcap Club in Toronto, October 21st. So we do potentially have a bit of a bull run coming up, October and the early part of November, but then don't forget we got tax season, right? Christmas season and tax season. So it's kind of hard to get too excited about 2025. I am, though, getting pretty excited about 2026, and more of my videos, more and more of the stocks that I introduce on my channel will be 2026 focused, right? I'm not looking for that quick win. I'm kind of looking forward to the next year and where can we be then? And that's basically what I'm doing when I'm looking at Planet Microcap Toronto. This is the new Planet Microcap Toronto list. A lot of cannabis stocks on there. I wonder how many more will show up. Planet Microcap had, I think it was 112 companies attend their event in the spring in Vegas. Right now, I think they're at around 60, 65 companies. So I'm hoping that a few more kind of show up. But I've already started my research on this list of companies, trying to find the next best stocks that present here in 2025. So I haven't quite said goodbye to 2025. I still think there's going to be a couple stocks here and there that are going to perform well this year. But I must say, I'm also not going to sit here and say that we're in a bear market or in a bull market. Don't really know right now. Could just be that September slowdown period. But I will admit to that. Microcap stocks so far in September have definitely been a little bit slower. I think we can all say that. The bull run, if it's not gone, it's stopped a little bit. The one thing I will say, though, is I have noticed a lot of investors not having a lot of patience, trying to extend that bull market maybe a little bit further than they should, are kind of chasing some of these stocks with a little bit more risk than I necessarily prefer on this channel. That's just my opinion. So what am I doing? Looking forward to 2026. Of course, there's a couple ways to play 2026, of course, right? You find your favorite 2026 stocks today. Maybe you buy early, maybe you're buying today, maybe you're getting the cheapest price because these are not discovered stocks in 2025. You're looking for these 2026 plays. In doing so, you accept a little bit more risk, sometimes a lot more risk. Or you wait until 2026, you have your list of your favorite stocks, wait for execution, wait for those 2 or 3 quarters of profitability. And then once you get that confirmation to your thesis, then and only then would you buy the stock. In that case, you're definitely reducing your risk quite a bit. You might have to pay a little bit of a higher price. So there's kind of 2 ways to approach these situations usually. Which way am I using? Both, right? I'm using both. Some of my favorite stocks I am accumulating now for 2026, but I'm also not going to build huge positions. I am going to wait for that execution. So this is what we're looking at. Get rid of some of those lines. Hope for the best. I think the next line to hope for the best, right? This is the point of maximum financial risk, typically the height of euphoria and the height of the bull market, point of maximum financial opportunity when everybody is angry and depressed. I love this chart because it points out the difference here, right? Like the human emotion, the human psychology to be able to do this, like everybody else on social media or maybe the stock market in general is happy and euphoric and maybe a little bit complacent, buying on highs, panic selling on lows. That's your highest financial risk when that is occurring. And when people are angry at a stock, maybe depressed, giving up, panicking, afraid of some of these companies, that is potentially sometimes your point of maximum financial opportunity. So the contrast here for some people just blows your minds. When I chart some of this a little bit myself, right, I think what we're waiting for is a little bit of this, and we're seeing that in some of those companies. I just showed you ADF Group starting to, it was at the bottom for a long time. People were really pissed off at ADF Group, right? Starting to get a little bit of hope. It's already up 100% since its bottom at $5 in April. Cannabis making a comeback, right? A lot of these small cannabis companies and shareholders are starting to show a bit of relief, right? It's coming up the other side. So when I show you this chart of point of maximum financial risk and point of maximum financial opportunity, you don't have to look at it as the whole stock market is moving in these different lines. There are different stocks in different positions on this chart, right? Gold, where is gold right now? Euphoria, right? Thrill, somewhere in between there. People are making money in gold stocks and excited about gold stocks. Gatekeeper Systems went from 20 cents to $1.80. Big new contracts coming up. People are thrilled. People are excited, right, about Gatekeeper Systems. Zoom a little bit. I don't know if Zoom Technologies is going to get all the way down to here, but right now, people with Zoom tend to get a little bit of anxiety. It's already up like 1,000%. How much higher can it possibly go? What about trade? What about tariffs? How can it keep doing what it's been doing? How can it be so successful? You get that anxiety. You get all these different companies in different places. Down here around the panic and anger side, right? TrueBar I showed you, California Nanotechnologies, NTG Clarity Networks, a little bit of panic and fear. So what am I looking for? Basically two things. Looking for companies that are going to fit somewhere in here, right? Perfect timing would be somewhere in here where you start to get out of that anger and depression and start showing some hot signs of hope. This was probably, ADF Group at like $6, $7, right? It bounced off of $5. It went to about $6, $7. I think really around then people started losing their depression. They still were down. If they bought at $10, $12, $15, they were still losing money at that point. But the depression was leaving. You were getting a little bit of hope. So I'm looking for companies that are kind of coming out the other side of the cycle here. And I'm also looking for companies that are going to get discovery, right, as always. So for 2026, those are kind of the two things I'm looking for. We'll see what happens with 2025, but right now I don't have very high hopes except for a few stocks that will pop on the investor conferences. And hopefully for 2026, we get much better returns. RBY. I don't know what stock that is. You're going to have to give me more information than that because it's not something that I am aware of. Sorry. Couple stocks that I am aware of here. Grey Wolf Animal Health, $1.31 Canadian, recently benched up, very good, up 63% on the year. And before you say, well, Cameron, where did this stock come from? I made videos on them. A little bit early, right? What did I just say? Hard to time the market. My videos on Grey Wolf Animal Health back here in 2024, a few months early. These videos were made at, I think, 85 cents and 80 cents Canadian share price. Share price dropped all the way to 60 cents until what, right? Why did I make the videos on them? They had a good business strategy. It just up through this point, it had challenges. Once that business strategy executed, it's been nothing but success for Grey Wolf Animal Health, other than a little bit of Donald Trump trade and tariff issues right here, of course. And then up it goes and rocketing up. So Good work. Talking about patience, this one took how many months? This one took a year and 4 months, about 16 months from the time I made my videos on them to basically getting 100% returns. That's not bad. A year and a half for 100% returns, I have to say, right? Why did they get these returns? On the backs of financial fundamentals, they're starting to show significant revenue growth, starting to show some net income, so growing and profitable. So I do want to give a shout out here to Grey Wolf Animal Health. Worth another look from investors to see if there's still more potential. Sorry, that wasn't a 16-month wait. That was about a 17-month wait to go from my videos here to basically 100% returns. I always joke that I don't make these videos for my health. They're not always going to be winners, but there's definitely going to be enough winners scattered throughout my videos that I should make you very happy, right? This is another one, Fresh Factory, only up 18% in the year, but all of that 18% is recently, and it's up significantly more than 18% if you were one of those patient investors that bought the dip here. $58 million market cap. Again, this is not a company that I talk about a lot, except, I kind of do. I also have 2 videos on the Fresh Factory published in February of 2025. This one, 7-month wait. Yeah, it's only up 20% for that 7-month wait. So that's the return isn't as good. But my question is, where can it go from here? Starting to get discovery, starting to get noticed by investors, starting to show better financial fundamentals, starting to get volume, starting to get a higher share price. So I don't necessarily think it stops here. I just wanted to point out, again, shout out to the Fresh Factory. Congratulations, and disclaimer, I am a shareholder of the Fresh Factory. This was August 27th. I bought a position here at 85 cents Canadian. It's now at $1.09 Canadian. And conversations like this are being had right now in my Patreon Discord and or Substack Discord. You can actually access the Discord through either Patreon or Substack, whatever your preference is. Go take a look at commonsenseinvesting.ca to figure out which one is best for you. Coming up, earnings. Orbit Garant Drilling. This is a gold driller. They have earnings, year-end earnings, not Q2 or Q3, but year-end earnings after market close, September 24th. Very consistent company. Going up, 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 up. I did make several videos on them. March 7th, I made a video on Orbit Garant right here. And then recently I did another one, August 9th, right here. They're up from both videos. Shout out to Keystone Financial for bringing this company to my attention. It has been a very good, successful company in stock. They do have their full year earnings coming up. I can't wait to see if they get a little bit more attention, because this is the 3 quarters of their full year 2025 so far. And you could see operating income, net income, right? This is a significantly improved company from their last year's fiscal results. So their full year earnings should show significant improvement from last year. And I'm wondering if that does not get noticed by institutions. And then on top of that, their Q4 from last year wasn't exactly super strong either. So Orbit Garant has a chance to have pretty good comparables year over year. And good luck to them coming up with earnings here on September 24th. Of course, they're not all perfect gems. This was the other company, the other stock in those videos. I covered Orbit Garant and Dynacor. Those videos were made here and here. Not quite as successful for Dynacor. They are getting called out by their largest shareholder again, Iolite, who is demanding a little bit more opportunity. NTG Clarity Networks, is this one of those situations, people are selling low, people are panic selling? It can't stop going down. It's down a couple pennies every day. And I wonder why that is. I wonder what people are doing. Year to date right now, 2025, NTG Clarity Networks is now officially a 0% return after reaching a 52-week high of $2.97. That is down 43.77% from this high. I do think NTG Clarity Networks has to take a little bit of a look here, a little bit of an audit after 2025. What did we do right? But mostly, what did we do wrong to drive this share price down so quickly? I do think there has been some mistakes made. They are now in this type of territory, unfortunately, and why people should consider stop losses sometimes around here. Because, you know, they're down below 40%. What did I say? 41% down from their 52-week high. So now for people to break even, for people who bought that 52-week high at $2.97, they now need 67% gains, probably closer to 70% gains by now, to break even on NTG Clarity Networks. I do wonder if there is opportunity here, though. It's not so much about the cycles month to month. Really, you have to look at the expense cycles of NTG Clarity Networks. In 2023, they didn't have much of a cycle. That was a growth year. Every quarter, expenses went up. This is a chart of expenses. In Q2 of 2024, they had high expenses, which then went down and then leveled out. And then in Q2 of 2025, they had high expenses again. So do we get that same trend line where expenses maybe drop a little bit and they have an improved Q3 and Q4? I hope so, because it's been getting pretty ugly for NTG Clarity Networks. I'm just about done. What else do we have coming up? Mind Technology announces earnings September 9th, aftermarket. This will be what? Their Q3? Their Q2? I forget right now, right? Q2, I think. Mind Technology. This is one of my favorite companies right now. ADF Group, I just showed you, talked about them going from $5 to just about $10. They actually hit $10 for a few hours there. They have earnings September 11th, pre-market, Orbit Garand Drilling, earnings September 24th, aftermarket, and then North Star Clean Technologies, September 10th, has a shareholder update. So earnings season is over, but there's still a couple companies trickling in, you know, but I don't know. Let me know what you think. I'm not going to sit here and say that we're in a bull market or a bear market right now. I don't know yet, but I will say that, you know, I have been seeing a lot of this. People kind of desperately chasing stocks. One good quarter is seemingly all it takes these days to drive a share price up 100, 200%. Just put in a good quarter and people will buy you. And, you know, you have a bad quarter, though, and share price is getting hit pretty hard. I feel like emotions are high. That's probably why this is. Maybe sometimes a little bit too euphoric, maybe sometimes a little bit too negative, whatever it is, but definitely a volatile time in microcap stocks. So now's your chance. Questions, comments, concerns, any other stocks you want to talk about. It is Q&A period for Common Sense Investing. And if you're shutting her down here because you just wanted to see the presentation, thank you for watching. Don't forget to give me a like, subscribe if you're not already a subscriber. But if you do want to stick around, let's get to this, which is comments. What have you got for me? Any challenges, any problems? Let's see. Anything that I missed so far? What did I think about Mind's press release about the ATM and buybacks? I find the market reaction weird. Well, everything about Mind Technology is weird. So I'll bring up the chart here so you could take a look at it. So one of the things when you're looking at US microcap stocks, more volatile than most Canadian microcap stocks even, right? But in addition to that, with a company like Mind, you have to keep in mind, I'm an inflection point investor. So the inflection point for Mind Technology right here was preferred share buybacks. Mind Technology was not a company that I was ever interested in because they had a massive amount of preferred shareholders that were getting paid dividends. This was an absolute terrible company because all their cash went to the preferred shareholders. They bought out the preferred shareholders. They went down to just being a clean balance sheet growth stock with only common shares. That was a huge change. I was lucky enough to recognize that and start talking about Mind in here before we hit that inflection point. Once they hit that inflection point, though, look at this, right? It went from $3 to $10.50. Then it crashed down to below $5. Then it benches up. Then it drops again. Then it benches up, drops again. Now it's benched up again. So volatile company, because in a large part, at least in my experience, there's still some of these leftover preferred shareholders that still have shares to sell. And whenever the stock kind of peaks, they dump some shares and share price crashes. So when you have a shareholder base that is basically ready to sell at any time, that's a problem. As far as their press release regarding the ATM, I really don't care about it, because if you go back and listen to their CEO talk about this, he talks about getting the ATM just in case. They have no real plans on using this, right? They have a strategic review going on right now where they're looking for acquisitions. There's been no discussion that they've found anything even remotely close to being interested in acquiring. The CEO has said that they just put this ATM in place just in case they do find something. They have cash, they have no debt, they have no reason to dilute shareholders unless it's for an acquisition. And as far as we know, there isn't one coming anytime soon. As far as the stock buyback programs, I mean, they put it as $4 million in stock buybacks. Do I think they should be buying back shares at, $10, $11, $12? Probably not. But would you not put in a buyback program when your share price crashed down to here for apparently no reason? I would, right? So a lot of the times, all these press releases, having an ATM, having a share buyback, it's just giving you options. I actually don't expect Mind Technology to exercise those options at all, to be honest with you. So as far as the market reaction, I think people are just in a volatile state right now. Let's see here. RBI, Rubellite Energy, high growth, attractive valuation with a promising outlook. I'll take a quick look. Why not? But normally, depending on what type of company it will be, I don't look at many energy stocks, right? So I can't even find it. Rubellite Energy, got it. Let's go. Let's see here. Up $2 share price, basically flat on the year, was devastated earlier. What does this company do? Oh, there's some pretty high salaries. What's the market cap on this company, right? An energy company engages in the exploration, development, production, marketing of heavy crude oil. So I am not an energy investor. We all have different niches. We all have different expertise. I have lost money in the past on junior miners, junior oil exploration companies. I absolutely know, because I've been in both of these industries, that typically the people that have the best quote unquote luck investing in oil and gas producers and or mining juniors are people who know people in that industry. You need connections, in my opinion. Myself, as a retail investor, I try to look for places that I have an advantage in. Where can I invest? Where can I put my money where I have the advantage? I do not have much of an advantage in energy companies. I don't know where the price of oil is going to go. I don't know what the recession is going to do to the price of oil. I don't know what OPEC's going to do. There's all these commodity factors I have to worry about, right? And then on top of that, I got to worry about what the company is doing in an industry that I no longer have connections in. My apologies, but that's not a company I will ever cover. When we get into resource sectors, the way I make money on resource sectors is resource adjacent companies. I've made a ton of money on Enterprise Group. They have Evolution Power products, Evolution Power systems, where their systems sell, energy to remote locations off grid, right? And they do that through natural gas, and that they've now purchased. Anyway, it's a longer story, but they provide energy solutions to oil and gas explorers. BQE mining. I know everybody's talking about, is it BQE water, right? Everybody's talking about BQE water these days because it's popping up on Portfolio 123. Mining adjacent company. They provide services to mines. McCoy Global, again, is it an energy company? No. McCoy Global, love McCoy Global. It's a company that provides drill casing solutions to energy companies. So I definitely play those energy adjacent companies and not specifically energy companies. So Not sure what stock I was talking about that you did not know. When looking into Fresh Factory, I came across a company called Fresca Foods. They seem to be a very similar business. Their website looks very similar, and Fresca was founded before Fresh Factory. Go look at what they're doing. Go look and see if there's inflection points or anything that makes them different, right? What stands out for me with Fresh Factory is they were completely undiscovered, right? When I can find these companies that share price has done nothing for several years of the Fresh Factory, but underneath that, the company is improving and just not getting noticed until eventually they do get discovered. And it's like, whoa, these financial fundamentals aren't that bad. I'm willing to pay a higher share price for this company. And we get that discovery. That's what I'm looking for. So the Fresh Factory already went through the one big inflection point where they have a new facility that they're just opening up recently here, and then they have another facility commissioned for next year. So I've got growth this year in Fresh Factory, I've got growth next year in Fresh Factory, and I had an undiscovered company that nobody was talking about. So except for Jerry Wimmer at Investor File. Shout out to Jerry. He's the person that basically introduced me to Fresh Factory when nobody was talking about it. So go look for these inflection points. What would make Fresh Factory a better company or what would make Fresca Foods a better company than the Fresh Factory? Am I aware of Fresca? No. Never heard of them before. Is the above concerning that a company has competition? No. I absolutely, I don't hate it, but it bothers me sometimes. What has happened to companies with moats? Everybody is looking for a moat. Everybody wants a moat. It doesn't really work in microcap stocks. I'll bring you up a couple charts here, right? Just to make my point, even though I should have a larger discussion about this. California Nanotechnology got a moat. This is all anybody could talk about here with Cal Nano was their moat, their unstoppable moat. They're going to control the industry because of their moat. Share price went from 10 cents to $1.95 Canadian. And regardless of still having a moat, their moat has not gone away. Share price has absolutely cratered of California Nanotechnologies, right? That's a company with a moat. Here's a company, I mean, not just without a moat. Can anybody tell me what Zoom Technologies does? Nobody even really knows what this company does. It's an ad tech company, affiliate marketing, social media influencer marketing on mostly screens like cell phones, smartphones, right? Look at the success of Zoom Technologies. They have earnings per share up 232%. Not only does this company not have a moat, they are about the furthest thing I have ever seen from having a moat, and they are having massive success. So be careful of that sometimes. In the microcap space, if we're talking about like $50 million company, just because they have some other $50 million market cap competition on the other side of the country, usually there's lots and lots and lots and lots of space out there. It's about being the best company, the most well-run company, the most efficient company you can be. I don't really need my companies to have a moat. One of the last things I look for in the research of my stocks is competition. That is what some people look at first. That is what this guy looks at last. Only in a few different companies have I ever looked at them and said, okay, there might be a little bit too much competition. It's definitely a risk. It's making me a little bit uncomfortable. 95% of the time plus, I look at the competition, go say, okay, we just need to beat out the competition by a little bit. That's it, right? There's lots of space out here. Good presentation. Did you check out High Tide's latest acquisition? No, I didn't actually. They're in a bit of the penalty box for me, right? I'm happy High Tide is succeeding. It's just I supported High Tide at a share price, started at around $3.50. They went up to well above $4. I think they went to $4.50. They completely forgot to run their business properly because they were heading over to Europe looking for acquisitions. Their businesses in Canada were suffering, were not doing as well as they should have. They were threatened with a hostile takeover. Share price crashed to below $3. I was not impressed. When you're in the microcap space, I'm more of a quantitative investor, right? I look at the numbers more than anything else, but I would be completely ignorant of my own investing psychology to not say that I'm not affected by what I think looks to be poor management versus what I think looks to be good, efficient, well-run management teams, right? Even though I try to look more at the numbers, that definitely has a bit of a play with me. So high tide for me is in the penalty box. I've been looking at other cannabis stocks. I've kind of moved on a little bit, right? So I do wish them success. I do wish that they had kept just doing what they're doing in Canada and opening up beautiful stores and in different markets and focusing on their Canadian business. I'm sure this acquisition in Europe will hopefully turn out for them, but I've definitely started looking in other directions from high tide, right? NCI comes up, has another company. That's NTG Clarity Networks. I'm not sure what your question is there. Any comments on Tribe Technologies Q2 earnings and the recent raise at 45 cents per share? Look, as far as Tribe, people give me heck for looking at Tribe Technologies. Tribe Technologies is a property management company using AI and new software programs to take what has been an old legacy business of property management and trying to modernize it into the 21st century. They've done a good job with that, but the problem is that it's an industry that's hard to change, right? Tribe has admitted they're not the lowest cost solution, they're the best solution, and we're in an economic recession and a poor housing market. So people criticize me for looking at Tribe Technologies, but I think if this housing sector ever changes in Canada and we start building a lot of properties again, I think Tribe is going to be potentially a good success story. Can they get there? The problem is right now, they are not profitable and they can't seem to achieve profitability despite their growth. They keep getting growth and you look at the top line revenue and you're like, wow, that's impressive. And then you look at their bottom line and you're like, ooh, room for improvement. I will give them credit. One of the reasons that I'm constantly monitoring Tribe Technologies, well, there's two reasons, is if they ever figure it out, if they can ever figure out a way to get profitability consistently, Tribe Technologies has a huge total addressable market. It could go up for a long time. The other thing is insiders have put their money where their mouth is. And, there's a recent raise at 45 cents. They just keep putting money into the company. So insiders are definitely aligned with shareholders. It's just nobody, insiders or shareholders, have been making money because they've been struggling to achieve any kind of profitability. So I like Tribe more than most. I'm hoping they succeed. I like them as a company. It's just they're struggling financially, right? So I keep them on my watch list. Market at all-time highs, and you must own the correct companies that making profits like WC, WDC, and STX. Yeah, I agree. It's owning the best companies are the way to go. Am I familiar with Rail Vision? Do you have thoughts on that company? Nope. I'm sorry. I have no idea what Rail Vision is. I'll take a quick look, though. Why not? Only 48 minutes into this into the live stream, so it's not like I don't have a couple seconds to spare, right? Rail Vision, what do we got here? NASDAQ stock went up briefly. That's a one-year chart. Looks like it had a pump and dump here in January of 2025. Five-year chart, it's been absolutely obliterated. $21 million market cap company. Let's take a look. What do they do? Rail Vision. Low C designs, develops, assembles, and sells railway detection systems for railway operational safety efficiently. Okay, I think I might have heard of this company. Aren't they doing a bit of a turnaround, trying to switch the company from rail into some other locations? Yeah, see, here's my concern. This is my own rule, right? Is that I don't invest in pre-revenue stocks. And even for companies making revenue, my rule is I never invest at anything over 10 times sales. So for them to have an over $20 million market cap company for 1.3 million in total revenue. I don't care what the growth is. I don't care what kind of growth you promise me. I simply don't ever pay that valuation. That's not investing advice. That's just my own personal decision, right? I do not chase these companies around. I've just never had any kind of luck paying that kind of price with a company. So at this point, you know, for a company like this, I wait to see that financials back up this market cap, because keep in mind, microcap investing is a competition. If we're looking at a $20 million market cap company, there's about 100 other companies out there that I like that I could buy for this market cap. So what is going to make Rail Vision better than those other 100 companies that I'm looking at that have a $20 million market cap? There's at least half a dozen companies out there with a $20 million market cap that I really, really, really like. So what is going to make Rail Vision better than those half a dozen companies at the same price that I really like? At this point, just a 5-second look at them: 20 times price per sale, 1.3 million trailing 12-month revenue. I'm assuming, I didn't even check, but I'm assuming they're highly unprofitable, massive EPS loss, negative $3.60 per share. That just does not fit my investing style. Sorry, right? What recession? Yeah, it depends where you're at. What letters does KIT trade under? KITS, like the eyeglass company, is KITS, KITS, kits.to for KITS. Would you take a look at stocks outside of Canada, US? I would, but I don't usually, because it takes me using a different broker to invest in outside of North America, which makes it more difficult for me to buy those stocks, which means that I need to have higher conviction and more potential upside for me to go through the extra effort of, number one, researching the stock, because I don't have that cultural advantage that I do in other countries, that I do here, right? I don't know what that market is like or what that exchange is like. I mean, let's look at one example here in North America. If I look at a company and it's 2 or 3 times price per sales on a NASDAQ listed stock, and it's 2x sales, 3x sales, I'm thinking that's cheap, right? If it's a good, growing, profitable NASDAQ listed stock at 2 times sales, that's cheap in my mind, right? You get the similar company that's, 2x sales on the Canadian Securities Exchange, and I'm looking at that as expensive, right? It's just the simple difference between the exchanges. The NASDAQ has higher listing requirements, more legit companies, more strict rules and regulations. I can look at that 2x stock on the NASDAQ and think that's a pretty good company, where I could look at a 2x stock on the Canadian Securities Exchange or the pink sheets and think there's problems. I don't have that advantage once I invest outside of North America. So if I look at Europe, if I look at other locations, it has to be the perfect kind of company and the perfect kind of outsized reward potential. I did that. I made a video on an Australian stock called EZZ Life Sciences. I'll show you this one. I might as well bring it up, right? So this is EZZ Life Sciences right here. And this was my lowest rated video when I made my video in 2024. Nobody watched it because it was on Australian stock. I got like 300 views. You look at this thing, it went from like, what is this, 50 cents? It went to $5. It was a 10x stock at one point. Yeah, it's dropped down. It's starting to consolidate. It's still up something like 500% since my video. But I went through all that time, all that research, all that work to make a video on EZZ Life Sciences. I think I got 355 views or something in the first 3 or 4 weeks. Nobody watched it, right? I didn't buy it because it was too hard. I phoned my broker, talked about buying a stock on the Australian exchange, and it was just too difficult. So I didn't buy it. I missed out too. So, but it definitely gets harder to invest in other locations, right? but I would. Doesn't mean I won't. I did look at EZZ Life Sciences, but that one was such a clear winner. The part about Fresca and the fresh comparison that raised my eyebrow was how similar the branding and website is. Even their logos are very similar. Fresca Foods is private. Oh, it's a private company. Yeah, I've got no idea. Interesting that they're similar. Interesting. I mean, I have to say that the Fresh Factory operates like a private company because they actually have quite a few preferred shareholders as well, right? Speaking of moats, have a close look at iFabric, who will be at Planet Microcap. I've looked at them a couple times. Not my favorite company. So far, I've been right in having iFabric is not my favorite company, I believe, because they have not done very much. This is another stock that I believe is supported by Jerry Wimmer at Investor File. So he's been right on a lot of stocks. So I'm not saying no to it, but this typically doesn't get me too excited. Again, unless it's like the Fresh Factory and there is a clear and distinct inflection point that I could see coming. If you could convince me that there is a clear and distinct inflection point that we can see coming, then I might change my mind. But typically, I mean, what am I taking a look at? Nobody's made money in this stock since forever, right? The people lost money from 2021 to 2023, and it's been flat since then. So I'm not saying no, but if you're going to pitch me a stock, you better tell me what the inflection point is that's going to make that line change, right? I don't invest in companies that are just kind of dead money, right? Moat or not, iFabric might have a moat. I just showed you it's been completely unsuccessful for the past 5 years. If it's got a moat, that moat is not working. What is your timeline for Thinkific, Cameron? As in, how long will you give them to see if share price increases? I don't know. Thinkific just got released a video on, I've been looking at this one for a while. Thinkific just released a CEO interview on small cap discoveries. This is another one that's been down, right? And it does look like iFabric, the company I just showed you, but there is arguably a clear inflection point coming up for Thinkific in that this was basically a venture capital. It was held by a company called Rhino Investments. Rhino has been selling their shares. They're down to like the last 8 or 9 million shares or whatever it is. And once Rhino gets finished selling their shares, which has been suppressing their share price, and this company has about $55 million, of which they're heavily spending in research and development, and they are selling now more to B2B enterprise companies instead of B2C, like just your regular people on the street. I think this company has some potential in the future. As far as the timeline, you know my timeline, it's every quarter right now, especially when we're in a market that is as bearish right now as it is, or as weak as it is right now. I am basically reevaluating companies on, it's so easy to get earnings calls nowadays, right? Earnings call is what, 30 minutes of your time reading through the earnings quickly, even if you only have an hour, you could fit in reading the MD&A, listening to the earnings call, and making a decision. So right now, I think I'll give Thinkific just until their next earnings for me. iFabric is working on an EPA kill claim for their clinically proven antimicrobial medical scrubs. Cool. Have they got it yet? Or is they just working on it? When is it becoming effective? When is this going to change the revenue? When is this going to change their income? Hate to be negative. Companies promise a lot, and I need to see some execution sometimes. Am I still bullish on Kraken Robotics? I still like Kraken Robotics as a company, but it's not really a microcap stock anymore, is it? Right? Like, my channel is microcap stocks. They are what, a $1 billion company. Keep in mind again, with this question, right? Why am I invested in microcap stocks? Because I believe as a retail investor, this is where we have advantage. This is where we can discover stocks that nobody knows about. Institutions can't buy them. They have high growth. They're becoming profitable. They're not discovered yet, right? They're willing to take a phone call from retail investors or answer an email with questions. We have access to these small microcap, picocap, nanocap stocks, they will talk to us. This is where us as retail investors have advantages. Once you get into that institutionally owned billion-dollar market cap stock and you're only talking to those institutions who are now funding everything you do and you're not speaking to retail investors, it's not really a matter of am I bullish or bearish on Kraken Robotics. I don't know anymore. I don't know. I don't have an advantage anymore in Kraken Robotics. I don't have information that the rest of the market doesn't have. In fact, I have far less information than the rest of the market because the rest of the market now is mostly institutional ownership of Kraken Robotics. So I have less information. I've lost my advantage. So it's not necessarily am I bearish or bullish on Kraken Robotics. Sometimes I'm looking at these stocks just going, do I still have an advantage right now, or am I just guessing? Am I behind information-wise compared to the rest of the market, compared to the institutions that are buying? Do I still have any information that I have that gives me an edge with Kraken Robotics? At this point, I don't. At this point, I don't. It's a large, complicated company with military contracts that I don't have visibility into anymore. So it's not so much am I bearish or bullish on the company. I don't really have any more advantages on these types of companies, right? NTG is frustrating. I get they need to do raises to support growth, but every time they do, it kills all momentum and crashes share price. Do you think they may finally be able to support growth organically? Well, I think that's the big question. I think if NTG Clarity Networks came out tomorrow and said, we're done doing raises. We promise you shareholders, we're now going to be cash positive. The days of doing more raises in the future for growth is done. We're at that inflection point. I bet they would go up 20% in a day, right? The reason, one of the mistakes they've made, they've now had 2 raises in a 10-month spread. That's a lot of buying volume getting sucked up into these raises. That's some warrants, putting some selling pressure onto the stock. I get it. I do. I get it. You're spending for growth. You need to do that. So I understand that. But if they could ever sit here, if they could ever say, we're done, we think we have enough cash for at least the next 2 years, right? The share price would go up. That is the major concern. Are they there yet? I hope so, but it's hard to say for sure, right? So it's definitely what is holding them back is the threat of more potential raises, because who wants to buy the stock, watch it go to $3 again, or maybe it goes to $3.50 again, and then it crashes back down to $2 on another raise, right? It's definitely holding NTG Clarity Networks back. I've gone through the companies in the Planet Microcap lineup for Toronto, and I'm looking forward to going through the small cap discoveries lineup. I like this time of year. Yeah, it's. I'm not as excited. I actually found I got a few more surprises up my sleeve. Let's just say that. Do I have as many as I did back in Vegas? I think Vegas had a few more companies that positively surprised me, but there's definitely a few coming to Toronto and small cap discoveries that I'm looking forward to. Now, is that the company quality, or is that just, back in Vegas, I think we were geared up for a bull market. Right now, I can't really say that we're gearing up for a bull market, but I do love this time of year. It forces me to do research. I've done manual research now on probably 150 stocks in the past 6 weeks. It's been absolutely insane. So yeah, I do love the investing conferences. It forces me to look at other companies. I have to say, one of my surprising new discoveries is a pharma company. I'm not much of a pharma investor. I think normally if this company popped up on my screener, I would have just passed by because I wouldn't have looked at it twice. But because I was forced to do research for the Planet Microcap conference, I did the research, and honestly, it's a better company than I thought it would be, right? Why does this trade with 5 letters that end with a C? I'm not sure which one you're talking about. Thanks for your insights. Very much appreciated. Thank you for another great discussion, for sharing your thoughts and knowledge. No problem. And with that, I'm an hour in. I'm done. This is when I'm all talked out. An hour of public live streaming on YouTube. Hey, I appreciate it. I appreciate you. I appreciate everybody who joins this channel, and it mostly for creating a community around microcap stocks. That's always been my dream. I did a podcast recently on on Value Bridge. I will link down below to that podcast where you could see me interviewed. And basically, when I started my journey on YouTube, I was trying to expose scam stocks, and that ended poorly with getting doxxed and all kinds of other problems. So I transitioned my channel into, instead of trying to expose the bad parts of this space, to try to encourage and grow the good parts of this space. And so far, it has been absolutely working out. I really love it. And thank you again for watching Common Sense Investing. I'll see you again in a week.